let me ask you something else. One of the buyers of Greek CDS was the Hellenic Post Bank, and from what I understand from information that was made public and even published in mainstream news, Hellenic Post Bank bought roughly $1 billion worth of credit protection, these CDS contracts against Greek debt in spring and summer of 2009, and then in the same year in December sold those contracts.
Mm-hmm.
Is that something that is being discussed? Is that an issue at all?
This was discussed too much because this case was one of the most interesting things what you could read in our charge file. This Hellenic Post Bank bought these CDS contracts on the summer of 2009. You are right for that. And the value was 1,300 million euros, the amount that they bought. They said that they bought this CDS in order to protect the bonds of the Greek government, what they had in their portfolio. So they said that for sure this was not it was not a naked transaction because they had the bonds to cover with this, let's say, insurance what they bought. After that, after the elections of...
Is that correct, though? I mean, I know their assets were about 17 billion, right? So do we know if Hellenic Post Bank had over 1 billion exposure to Greek national debt?
Yeah, more than 1 billion.
Okay,
much more than 1 billion. Much
All
more,
right.
much more. The question is that the new government on December 2009 decided to sell these CDS contracts, and they did also a 27 million euros of profit that was also booked on the balance sheet of Hellenic Post Bank for the year 2009.
Mm-hmm.
This is true, that happened. And what we claim on that, it is that if a Greek bank, what is Hellenic Post Bank, that belongs to the Greek government, to the Greek state, is buying CDS, how then you can convince speculators to stop buying CDS? If the Greek government buys CDS for itself, how you can convince others to don't buy? That means this operation, especially because it was discovered after some months, this transaction, let's say, open green light to the international speculators to kick the Greek market, because it is very simple to understand. If I buy CDS for myself, why you don't have to buy it for myself again?
Well, what about the fact that they sold it when it would have become much more valuable asset, considering what Greece was heading into?
Okay, look, nobody could say why they sold that on December and they didn't sell that later, because even when they sold, they were very happy because they did the profit, you understand? So when you sell with a profit, you never know what the future could be. Nobody was waiting that even after the Troika rescue plan here in Greece, even after June, even after May 2010, the spreads of the Greek government bonds would continue to increase. So they could not predict in any case what could be the future price. In any case, they sold and they got profits of that. We don't complain that they sold at that moment, they didn't sold later.
Okay.
Because for that I'm sure that they didn't do that with any purpose. What I complain and what we complain, it is that by doing this transaction, they gave green light to the international speculation to start trading on Greek CDS. That was the main problem.
Okay.
Especially because today the value of this CDS, that it was expiring in the previous days, it is calculated on around $27 billion.
So we're talking about a very big profit from whoever bought it.
Somebody was going to make billions on the bankruptcy of this country.
Mm-hmm. So
that's why you hear from a lot of sides different voices arriving to say that Greece is better if bankrupts, it's better if it goes out of the euro, etc. Because these people who they say that, they are making billions on that, you understand?
Yes.
They wait the default to happen because they invested on the default and they will make billions on the default of this country. This is what the world around has to understand.
And these, of course, there are still CDS contracts outstanding. They haven't all expired, obviously.
There are a lot, yes. And every day they are placing new because, you know, the CDS is working on single expires. It's not working in globally on the total debt. That means there are issues of CDS for every single bonds expire. That means now we have another expire on August, and again there are a lot of CDS contracts traded for the August expire. After that it will be for November expiring, etc.
This may be a little off topic regarding your lawsuit, but I assume you've looked over the memorandum, or you have some impression on it, and some of the things that have occurred as a result of this vulnerability that the Greek nation has been under as a result of the short selling of the bonds and so on and so forth. What is your opinion on what's going on from a I guess this privatization, or whatever you want to call it?
Okay, this is not let's say privatization as it had to be. You understand? Because now we are let's say obliged as a country to sell off everything at very, very low prices, and this is at all convenient for Greek economy, because this is not the way to solve the problems of this country. Because what they propose us to do, it is to sell everything at ridiculous prices. For example, I make you something very, very easy to understand. Hellenic telecommunications, price value for the share of 2 years ago, it was 20 euros, today it's 6 euros. So we didn't sell 2 years ago at 20 euros, we are going to sell now at 6 euros.
Right.
And we are going to sell profitable public institutions for the price of 2-year profits. This is not only ridiculous, this is a crime.
And of course it's not just...
There is not any deputy who could sign for that, and he will be alive after some years, because here the people are very angry. They are in the squares of all the country, and government officers who they will sign, who they will vote for that, and even other deputies of other parties who will support that, they will not have easy life here, because you cannot sell healthy and profitable government institutions for the profit of 2 years. You understand? This is the first. And the second is the money we are going to take with that, okay? Let's say that we are going to take 30, 40, 50 billion euros. What we will do with this money? We will pay expires for another 6, 7 months, and then please explain me on the 8th month where we will find the money to live. Because if this economy will not start to grow again, to increase GDP, and to start working normally, whatever solution you apply, whatever plan you have, the solution will never be good. Because the problem of the government debt is not only a single debt figure, it is a ratio, debt on GDP. The problem is the GDP, not the debt. If you don't have GDP, and if your GDP is every year decreasing, whatever is your debt figure doesn't mind. You will not have success, whatever you do.
Now, I want to... go ahead, sorry.
Tell me.
Yeah, so I want to ask you, actually, because you're an economist, and also you've obviously spent a lot of time thinking about this, and you live in Greece, you're calling from Athens right now. Right before I had you on, I had Desmond Lackman, Dr. Lackman from... he used to work at Salomon Smith Barney, and he was chief IMF economist for the River Plate division in Argentina, Uruguay, and Paraguay, and he was at Salomon on the sell side during the period where the Argentina collapsed. And one of the things that what we focused mostly on was Greece, and specifically solutions. And one of the things that he mentioned that I found very interesting was, he said, unlike the case of Argentina, where much of the debt, or if not all of it, was governed under U.S. law, in the case of Greece, he said roughly 90% of those bonds are contracted under Greek law, which means that legally the government can, if I understood him correctly, can default on 90% of it without having to deal with lawsuits in responding to lawsuits and things like that.
Exactly.
Which is a very important point. Very important point to make.
This is why we blame the government here that didn't understood what exactly was the topic 1 year ago when they start discussing with IMF and the European Union authorities. Because this debt, and this is a very, very important step, you need to understand. The Greek debt until 2010, everything that was issued from this country, it was uncovered, you understand. It was not collateralized. That means that even without to pay, even if you was going to default 1 year and something ago, the only problem that this country could have, it was only the limited access to the international market. But in any case, we have even today the same problem. even after we sign an MOU agreement and we collateralize the debt of this country, again, we cannot access the market. So what they answer that we did that to guarantee our future access to the markets, this is stupid. They don't have even to say that, because after 1 year, not only we are not again in the markets, but we are going to sign a second MOU agreement, because again the markets continue to be closed for this country, you understand? So the bad thing what they did by this MOU agreement with the Troika, that means IMF, European Union Commission and the European Central Bank, it was that they collateralized the Greek government debt. That means that every new issues from May 2010 and in the future are issues of collateralized government debt. That means that all the Greek government properties and the future revenues of the country and all tangible and intangible assets could be executed in the future in case that this country will not pay some expire. And because not only the new debt is collateralized, but it is also regulated under the English law, because previous issues were regulated by Greek law. The new issues after the Troika agreement are regulated by English law. So two things could happen. First thing is execution because the debt is collateralized, and second, and don't take that so easy, and this is very bad what I will say, the debt now, because it is under English law, could be transferred to any third party. That means could be transferred to private institutions, to individuals, to corporations, but could be transferred also to Turkey.
Well, absolutely, and actually we've heard about that, correct?
Could be transferred under a factoring agreement, you understand? And anybody could buy. That means if tomorrow Turkey is going to buy some 20, 30 or 40 billions of Greek debt, explain me what will happen to the expire.
Well, what you're making...
If this country could not pay.
Yeah, and what you're making is a point which is a point of national security, which is where do you draw the line?
That's why we say there is not sovereignty anymore.
Right.
There is not sovereignty for many reasons. First, because this country is not deciding by itself at the moment. Others are deciding on the future of this country, on the future of the next generations, of our kids, of our economic questions, etc. But it's not only a question of decision. It is a question on property execution, and it is also a question of debt transfer, of factoring of third parties.
We've heard a lot of certainly a lot of rumors now since in the past year, a lot about oil exploration efforts in the Ionian, natural gas in the Aegean. We've heard about nickel deposits in mainland Greece, gold reserves, a lot of different things. So it's clear that there is a big risk for Greece to lose a lot of its wealth as a result of this deal. Let me ask you, from what I understand, the memorandum, the first memorandum of understanding, the MOU you said, that was, from what I understand, passed unconstitutionally. It was not voted upon by 180 members of parliament.
Exactly.
So what... If you can answer this for me, and I don't know if you can or if you're qualified, but what legal obligation do Greek citizens have to honor the deals signed by a government that acted unconstitutionally?
Look, there are different opinions on this topic, what you said me now, but all the opinions, they arrive to a common result. That means that we don't have any obligation to honor a contract that is against our constitutional law. If this contract was stipulated violating the Greek constitutional law because it was not approved in the parliament by 181 votes, but with a smaller quorum of 151, that means that this contract, constitutional speaking, is not valid. That means we don't have any obligation to honor that.